Okay, welcome to Well Coaching Masterclass. This is gonna be week number 5, if I'm not wrong. Okay, today we're gonna have the outline like this. Okay, we're gonna check the homework and then we're gonna go through the quiz time. Okay, prepare the notebook and prepare everything that you have to answer. Be ready to answer about dot 1, dot 2, dot 3, dot 4. And then we can go to the chapter 2 with the dot 5 and dot 6 today. And then half hour later, we're gonna go to the trading view. Today we're gonna visit company and we're gonna learn, begin at the end in your mind by know how to get profit from trading. That is ultimate goal of this course. We're gonna learn uh, to see how we're gonna get a profit from the graph and from the stocks. Okay, so we're gonna start with checking the homework. Okay, this is all the homework that I asked you the last time. The one thing that you're gonna see is I give you the same questions. Okay, and this is a good thing. Okay, no one have the same answer. Okay, the good thing number one is mean that you didn't copy from each other. This is called the dignity of our school, BHCC. Everyone have to submit by themselves. And no one right, no one wrong. A little bit is AMD about you, Tat, Peter. The AMD is not here. AMD not top 10, okay? Because maybe you miss about AMD and Amazon, AMCN, okay? And AMD is a competitor of NVIDIA, but AMD is like a computer, right? The AMD is like the company who produce about the chip computer, but it's not top 10 yet. But the another thing is good, okay? So you have to move AMZ and Amazon go to the number 4. And one thing that you have to learn about this one, you see, Berkshire Hathaway, the last time that we learned that this is the stock that never split before, but like the last 10 years, Warren Buffett cannot hold himself for the request from the retailer investor who want to invest in this stock. So Warren Buffett decided to have a new stock we call Berkshire Hathaway B. Okay, you will learn in the class in financial or some class about the we call preferred stock and common stock. That is the one thing. But A and B is not about the common stock or preferred stock, but the idea is similar. What does it mean? In order to buy A, you get a full right. What about the full right? You get the dividend and you get a right to vote. You have a chance to vote who gonna be a CEO. What about the direction of that company? If you want that, right, you have to buy dot A. But dot B is mean that you not care about who gonna be CEO, what is the direction of the company, but you want the dividend. Okay, so in order to get dividend, you buy stock B. Okay, so the stock B is mean you get dividend, but you no right to vote. Okay, understand? It means that you get a cheaper one, but the correlation is the same, almost the same. Okay, if the Berkshire Hathaway go up, this one is go up too, but the percentage is different. Okay, why the difference? Because in order to move like you know about the number, right? If you move 4,000 something, it means that you move at 0.69. It's not easy for the big price because the liquidity of the stock is very, very less. No one buy the big stock like this. You know what I mean? Because the price is very, very expensive. So the spread between the bid and offer is different. Sometimes no one sell, sometimes no one buy. It means the liquidity in this market is very, very dry. That's why people come to buy this stock more often. Okay. And someone put the stock that you like Lilly. I think this company Waka is about the coffee, right? I is that correct? Am I correct?
I'm sorry, I didn't mind what kind of country is it, but it was on the list of ranking
Oh,
on a certain
okay.
of a website, and
Uh,
it's
okay.
certain. It's obvious
Mhm.
that U.S.
Mhm.
company, but
Mm.
I'm sorry, I didn't
It's
research
okay.
about
It's
that.
okay. It's
Yeah,
okay.
what do they do?
But you see, even we want the same data when we click on the Google. Sometimes the Google give you a different answer, which is not totally wrong, not totally right. You will learn later on in life about this one. Okay, and this one from Lolly. Yeah, Wally got everyone about the top 10. Okay, so sometimes it's a little bit different. Is this okay? And this one is an idea. Number 9 and number 8 is from Disney and Duolingo. Okay, is it correct? Because I'm okay. You can choose any stock in the world to put in this rank. I want the main idea is what is the ranking about 1, 2, 3, 4, 5 in that 10 company, which is correct. Okay, so all this one can be moved up and moved down a little bit. Okay, talking about the Berkshire Hathaway A and B, Google have that too. Okay, Google have a Google A and Google B, and the idea is the same. If you buy Google A, you have a full right. If you buy Google B, it means you get only dividend. Okay, no right for voting, something like that. Okay, that's all. That is the top 10. So moving to the homework, the next homework about the retire, about crossover. Because of uh, you all four have a different time about retire and have a different amount of year that you're gonna collect the money, which is good. You can see the difference about the money that you want to get. Okay, let's see that this is the example that you want to retire at 40 and you want to die at 70. It means that you have a time that you're gonna freedom. The number of year of the freedom is 30 year, and you want to withdraw each month after you retire at 40 about 5,000, and the annual rate 4% is come from the interest from the bank. Okay, it means that if you have this money and you put in the bank, okay, each year the bank gonna generate you a little bit money, but not much, but enough to give you 5,000 each year for 30 years. Okay, let's say if you calculate, if you have a calculator. Okay, yeah, put your calculator by yourself and then start with 5,000 and times 30 times 12. Okay, because 1 year have 12 months. It means 1 year you have to have money about 60K, and then you time 30 because you want to use that 30 years. You see what happened? Tell me, Louis, what number you get after you multiply by the number that I let you know? Louis,
Oh,
what
what
number
what
you
do
get?
you mean?
If I want to get money like 5,000
Five,
each month for 30 years, how much money do I have to have?
so 1,047,000.
No. Peter, what number you got?
So like you said, I'm going to using 5,000
Mm-hmm.
multiplied by 12. So we got
Mm-hmm.
60,000 a
Mm-hmm.
year.
Yeah,
And
use
later we
calculator.
use,
Mm-hmm.
and you, when we were using that 60,000 a year
Mm-hmm.
multiplied by
For 30
30.
years. Mm-hmm.
So we have $1,800,000.
Exactly. Okay. What I want you to know is mm-hmm, that amount of the money mm-hmm, is bigger than amount that you save. Okay. It means that this amount of the money is amount that you save to get to the point of freedom. But if you multiply 5,000 for 1 year, it means that 1 year you have to have 60K. And you multiply 60K by 30 years, you're gonna have money 1.8 million, which this number is only 1 million. It's not enough, right? But because the answer is from here, 4%. So even 4% can generate the initial capital 1 million to 1.8 million. That is the thing that I want you to know. So it means that you can have money 1 million and then put in the bank, okay, and that bank can generate your money 4% per year interest. You can live this life until you die and still have money left a little bit, okay? But what is the amount of the money that you have to save to get this 1 million, okay? This is a year that you have to save money until you go to your goal, okay? Let's say that you have 35 years to save your money, okay? It means that, oh, this one you have to change, okay, about 5% because in order to save now, we're gonna put that money into stock market. But after we reach that amount of money, we're gonna put that in the save money, which is the bank. Different, okay? When we save before we go to the freedom, we're gonna save in stock market, which is not 5%. Okay, stock market gonna give you about 9% that I talk to you. Okay, so number is gonna be changed, and this number gonna be changed a little bit because this means you have to use your goal. Okay, let's say Peter, your goal is 40. You have to minus your age. Let's say 25. It means that you have time for saving that money 15 years. You're gonna put 15 here. Okay, I want you to understand. So today we're gonna take a look about that number together again. Okay, and we're gonna use the number that realistic. Okay, let's say that this is 5,000 again. Okay, I'm gonna check. And you have the 30 year. Okay, Peter, because you want to retire at 40 and you want to die at 70, and this is the amount of the money the same that you have. Okay, and next one is about the year from now until you get retired. Okay, the number of year you have to save for retirement. Let's say that now you are 25, so now you have 15 years to save the money. Okay, and we're gonna put that money to stock that generate 9%. I'm gonna show you how to get 9%. Okay, and you save it every week. So it means each week you have to save 635. But if you delay yourself because you say that you have to study, you don't want to save money now, it means you want to start later after this 5 years. You have to save like a 1,200. Okay. But if we look at the realistic, let's say that if you want to retire about 50, okay, and if you want to die about 80, okay, the same amount, okay. It means that you have the time for the freedom 30 years, the same, and you want 5,000, the same. You want this money, the same, but you have more time to save that money 10 years. What happened after that? You see, you save only 200 a week, which is very, very doable because you get paid more than 200 a week. Understand what I mean, Peter? Okay, this is a very, very sound, very safe, and very easy one. It means that if you have more money, You can put that money to another stock. You can do a crazy thing. You can invest. You can gamble. But this is another plan, which this is a how to say, we call like a basic plan. You have to save for yourself. If you have more than this money, you can do something else that you think that you get more than this. But this is very, very simple, easy, and use only finger to get that thing. No need to use a harder thing. No need to use a more intellectual or advanced knowledge. This is very knowledge. Put 215 into stock market, and let's say that is S&P 500. Okay, and you're gonna get 9% easily. Why I say easily? Because this is from something happened already. S&P 500, and you're gonna ask me, Prof, how are we gonna get S&P 500 for 9%? It's very, very not easy. You can search Google. Okay, over the last 150 years. Okay, you can search any Google. Okay, but be careful, because some of them not long enough. Okay, you have to put like from the beginning. Average yearly, okay, return is 9.26. Okay, it depends on which what time that they calculate. Okay, and you're gonna see 9%. Sometimes they say 10%, and 9% it come from the capital gain is 6.9, and another three is come from dividend. Okay, you're gonna get both of them. And after you get dividend, you have to reinvest it again, do nothing. Okay, and then you're gonna get 9% very easily. 9% is very, very minimum one. If you know nothing, you just put money like a DCA, you get 9%. But if you know a little thing, okay, you get more than 9%. We call like a rebalance. We call like when the price go low, you buy more. When the price go high, you buy a little. But at the end, you get more than 9%. This is very, very basic math. Okay, this is a S&P 500 graph to see, but 9% is the average. What does it mean average? It means some year the price, the return gonna be minus or go down, like a -8, some year -74. Sometimes it's a 4 years consecutive, minus 4 years. This is the thing. A lot of people cannot hold it, and they gonna sell here after the return like go down 43%, because everyone all the news gonna say the stock gonna collapse, everything gonna go to zero. The news gonna be like in the pandemic, everyone gonna die or something like that, and then people sell, and then after that the price go up. Okay, so you see the blue is the price go up year by year, and the red is go down. So it go up, go down, go up, go down. Yeah, it happened like this. The thing is, when it go down, can you hold yourself? This is a hamburger crisis, 2008, and this is even the COVID one, 2020, the price is go up. Why? Because on the March the price go down, but May, June, July, it go up, and go up more than the time that they go down, something like that. Okay, and 2022 is go down, something like that. Okay, so if you like put the money, dollar cost average the same amount of the money, 200 every week, you're gonna get 9%. But if you have a little bit trick, let's say if the year that they go down, you put more money, do you think what's gonna happen? Yep, you're gonna get more return. Okay, that is all I want to share with you today about the homework. Okay.
I want to
Okay.
ask about
Yep.
the like what do you think is the time that is best for us to take our money out from the S&P 500? After how long we put in?
We can take out when you want to retire. Remember? Yeah. Yeah, that is the
So
best
it's
time.
better for like a long term.
Yeah, you have to put like
Okay.
you forgot that money. And then let's say that Peter want to retire at 40. Louis, you want to retire at tomorrow. Yeah, I remember the last time you said to me tomorrow. So it's not doable for tomorrow because now it's tomorrow already because the last week you say you want to retire at 19 or something. So let's say that Louis, you want to retire at 30 and you now is you 18. So you have 12 years. Okay. In that 12 year, you have to put the money there. Do not take it off. Okay. Until you're 30. And when you are 30, you get that amount of the money from the chart, right? You get that amount of money already. Then you don't want to put the money in the stock again. Why? Because if you put money in the stock, it's going to be volatile, right? Because you don't know the money is go up or go down. But if you get that amount of money already, you have to take it off. You have to withdraw and then put the money into the bank, which is safer. How to saver? It means the amount of the money is not fluctuate. It's gonna be the same and go up, but go up slowly. But with 9%, when it go down more than 9%. Okay, but within the bank, it's gonna be the same money, right? Okay. If that bank didn't broke, okay. So if you put 1 million, it's gonna stay 1 million. And next year you get 1 million plus 4%. And then next year you get 1 million plus 4% plus another 4%, something like that. Okay, that is what you want after you retire. Okay, this is a very simple plan. But if you want more, a little bit advanced plan is another thing. Okay, we will learn later.
It's really true, Louis. It's really true that like the stock and like let's say Bitcoins like going up and down really quickly. It's better not to move money quickly. See a long term. See really long term. So stock is going, sometimes it's going up really quickly. And people think that, oh, then if we buy our stock right now, we can earn money. But it's a kind of like really short term perspective. But it may be go up more or it may be decreasing. So nobody knows. So don't move money quickly. As long as we have enough money, like Warren Buffett. For them, stock is game. Stock is a game, just game. Bitcoins are also game. But for us, we think it's similar to saving money. But saving money can earn just interest, like for person like this. So it's not enough for us. So stock is better than just saving money. But we shouldn't move money so quickly. Like, oh, let's going up. Oh, let's buy it. Let's sell it, and going down. Okay, let's buy it. Don't do that. It's really basic theory, I think. As long as we have enough money,
What if?
Thank you for sharing.
What if? What if we wait that 10 years, for example, and then during that year the S&P drop very low? Will we still get a profit?
Don't rush. Don't be rushed. Don't rush.
No, I
I
mean
was thinking about
after
how
all the year, like we plan to retire at 40, like in here, for example.
Yeah, I know.
What
what
if
you
at
mean,
that
Louis.
year in 40 it dropped so much?
Be patient.
You can delay. you can wait. You can wait another year, Louis. It's a good question. Yep, I can tell you, and this why I'm gonna show you about the we call the historical. The year that they go down consecutively, as I see from here, is only 4 years, Louis. If you very unlucky, okay, after you put the money and then the year that you want to retire is this year. You know what I mean, Louis? Okay, so the amount of your money is decreased, but it decreased a little bit. Why? Because the 10 year before you go up, and only this year is go down only 8%. It means the money you get maybe 90% of the total money you want. You know what I mean, Louis? Or maybe more than 100% that you want. Why? Because this is 11%. This is 37%. And this is 43%. It means the 10 year before this year, you get average more than 9%. You know what I mean, Louis? So even this year, which is you want to retire this year, decrease 8%. At the end of the year, you want to withdraw your money. You're gonna get money more than you expect from the Excel. This is a good, this gonna answer your question. Is that correct, Louis? Mm-hmm. Okay.
But I think it's better if we can wait. Be patient is better.
I would say
yeah,
maybe
but
can I maybe like
yep,
at
yep,
some
yep. Go
certain
ahead,
year
Peter.
you may have something like, you know, like pandemic. So like we can you can you know, like you can see on 2022, and I remember there also have a market crash like exactly like 4 years ago around this time when COVID started to hit, and like it's getting crashed. And then right now it's like 2, 3 year, 4 year later, and then like it's come back. I would say that. So it's a good sign. That's the first thing. And the second thing is like if we are like, you know, like if we're thinking about like the time that we get some profit, we get like every year we have like 9 to 10% of them. You don't want to put too many eggs into a bag, or maybe you can spend that like the extra surplus. You can use it to buy gold or crypto. You know, like because like if it only stock crash and then you still have gold or crypto or even real estate property to back you up.
Okay. Yep. That is I told you before. This is a very little money, you know, 200 a week. After you get paid, you're gonna get more than 200. 200 is like a nothing from you, but it can create your freedom easily without thinking. No thinking about gold, no thinking about Bitcoin. If you have enough money, like Waka say, you can put any money to anything that you want, but at least one plan. This is only one little plan that you can save yourself from greedy, because this is very easy. It's like you put 200 to the bank, but in terms of the bank, you put in S&P 500, which is included top bank in the world in this S&P 500. What does it mean? If the bank broke, your money gonna gone. But if you put money in this S&P 500, if your bank broke, your money doesn't gone. Why? Because Bank of America, Wells Fargo, Santander, Citizens Bank, any big bank in this country are considered in S&P 500. And if that bank broke, your money gonna be zero. But if that bank broke from S&P 500, it means another company gonna come to S&P 500. You know what I mean? Because I told you S&P 500 is the best 500. If one company collapse, that's all. That's all. And another company from the ranking 501 gonna come replace that company. So it means if you put $200 in S&P 500, safer than put in the bank. Okay, this is what I want you to know. So we will talk about this one later, because this is very simple one. Okay, if you have any question, yep, it's good for the question. Okay, if I cannot answer the question, just let me know if I'm not clear. Louis, if everything I answer your question, right? Okay, thank you. So we're
Can I
gonna
ask a
go
question?
to, okay, yep, ask me, Peter.
Like because we're talking about what happened is S&P 500 crash, and then I'm thinking about the option that if correct me if I'm wrong. So do we have like S&P 500? Do we have preferred stock and common stock too?
Nope, because S&P 500 is mean we buy index from
Oh,
500.
index. Gotcha.
Yeah, we buy
Because
we buy 500 company.
yeah, because I was thinking like if it crash or something, like for example we buy stock, and in the scenario we are preferred stockholder, so like we still get dividend first. So actually, like if it crashed, you still get the money back. You get it first. But if it's on common stock,
Yeah, I know what
they
you
get
mean.
volatile,
But we can S&P crash, okay? Yep, easily. They say that S&P can crash only 49% when valuation of recession. Okay, something like that. Yeah, will gonna crash. Okay. Anyone say about crash, but now it go to new all-time high because last year everyone said the S&P gonna have a recession or something. Is it bad time to invest? That you can ask this question. In fact, history has shown that positive outcome occur much more often over a long period of the shorter one. Over the past 94 years, S&P gone up and down each year, okay? And in fact, 27% of that year happened negative result, which is, we show this one for you already, right? This is all 27%. And this 20% mean nothing because the value of your wealth go down, but you didn't sell. Once the price go up, the balance in your computer, in your eye is gonna go up, but the feeling that's gonna go down, you're gonna hold it. You're gonna hold yourself that do not sell. You're gonna close your screen. That's all. That is the thing that we have to learn about this one, and it's hard to say, but it's not easy to action. That's why that's why not a lot of people, very few of the people know a lot of people know this one. The same with like exercise. Everyone know that exercise is good for your health, but very little can keep consistency about eating and exercise the same. It's easy like that. Okay, so you can say S&P can crash to like 60%, someone say, yeah. But you can say that go to zero, okay? Because that is the one that we very curious. Can S&P go to the zero? Can S&P index fund lose all their money? Anything is possible, you see? Of course, but it's highly unlikely. Yep, I agree. I think the same. Okay, go ahead, Peter.
So basically, the stock and the cash are paper.
Yeah.
There is no 100% possibility like the insurance.
Yep.
So
it's
happened, and every 10 years something has happened.
Yep.
So it's true.
And and also the 9% that you told me. This is a question. Is that a compound rate for the stock as well? The index
compound.
Like, is it compound? Like I saw on the chart.
Compound.
So like
compound.
22,
But
like for example,
after you get dividend, you have to buy S&P, reinvest. Okay, when you get dividend each year, you have to come back to buy.
So that's why I compound. Got it.
I think the S&P 500 is the only index that passed World War I and World War II. Okay, what happened on that year? You can know from the graph. Okay, and you see even the World War, this index still survive. Okay. Yeah, you see impact on war on stock. You can see in that year what happened. Okay, and then still it's come back. Okay, despite the ends at Hitler. You see Hitler invaded Poland in 1930. 1939. Okay, and let's see what is the 1939. 1939 is here, you see. So it means that the war didn't last long. You know what I mean? They last about 2 or 3 years. This
So
is
most
all.
certainly
This is.
it's happened for when it like certain special thing gonna happen, like World War One, World War Two, recession, pandemic.
But
Okay.
we should know that there is no 100% guarantee.
Yep.
Yeah. So
Peter, you're right. Every money that you put in stock, you have to think that money can go to zero. But you told me about that, right? That is the thing. But you have to remind the same thing. The money that you have in your pocket or in your bank can go to zero too, as the Waka say, because it's like it's just paper. Okay.
Yeah.
Okay.
So this is our responsibility. How do we spend the money? Invest to S&P 500 or save in a bank or hold with cash.
You can choose.
Yeah, this is our options. But according to the statistics or some research or what do we believe? How do we spend?
Yeah, interesting. Yep, that's why we have to learn about this thing. Okay, we're gonna go.
Exactly.
Yep. The more you learn, the more you understand yourself, and the more you understand about the world, and that is the reason we're gonna learn. So the time fast, the time pass, the time fly. Okay, today we cannot go to the .5 and .6. We're gonna save it for the next one, and it's very good in conversation. We have a hand-on experience. Okay, so for this one today we're gonna go to the trading view. Okay, I'm gonna go to the session that you interested first, and we're gonna come back to learning about the chapter 2 and next week. Okay, today we're gonna go to the trading wheel. Let's go to the trading wheel. And then you have to go to okay. Open your chart, okay, and make sure that you have a chart like me. And now I log into the same version as you, okay, the free version. Click on Apple, AAPL, and choose on day. You see, day. You see, they're gonna have a time frame. Choose on day. It means one candlestick represent the price that move in one day. Okay, so now the price is go down after it go up. Okay, so when you see about the price, be careful. We're gonna learn this one deep. When someone say go up, if you say like this, you're gonna say that person is lie to you. It's not go up, golf. It's go down. Okay, who tell you go up? It's go down. Okay, because you see only from December 13 until now, you feel it's go down. You see, but the same stock, but with the scroll with the time frame, I move by mouse a little bit, and I start from August 2020, something like this. You see, this is August 2020, and now the price from here is 103, and the price now is 170. If I buy the stock from that day until now, I get 70% from Apple. 70%. If I put here 1 million, I get 1.7 million. So it means price go up. So you see, even the same stock, someone say it's go up, someone is say go down. It depends on the time frame that you think. Okay, so be careful when we talk about price go up and go down. Okay, we're gonna talk about this one later. And then if we want to know about the another information, because we want to visit the Apple, okay, but we cannot afford to buy a ticket to California to the factory. How we gonna see general knowledge from Apple? We can click on here because you see they have a code E. You see E. When you click it, E stand for earning. Okay, everyone see it?
Wait, can you slow down?
Okay. Peter, can you see E on the graph?
How to get the
I can
E?
see E on your graph, but I cannot see E on my graph.
Yeah.
Okay, Waka, can you see on your graph?
Yeah, I have E and D mark.
Okay, the same. So
How do you
Peter,
how do you enable
computer.
that?
Did you use computer or telephone?
I'm using computer right now.
Okay. Yep. Did you click on Google on Apple? Did you click on Apple already?
So Go, can
Did
I
you
ask about the orange
I did.
line about it is said that NI 225. I haven't I have a
Which one?
orange line.
Which one? The orange, which one? This one?
I don't know, but I have in my screen on my screen.
Okay.
So there are
Yeah.
red candle and a green candle and orange line.
Okay.
I
You
don't know
can
what
capture to
they
me.
there.
Yeah, Waka, if you can, yep, you can capture and send it to me through WhatsApp or anything.
Okay.
Can I share
Okay,
my
Louis.
screen?
Yep, you can share your screen. Okay, I gonna show you how to find the thing. Okay, I gonna let you. I gonna allow you to share your screen. Wait a minute. Okay. Yep. Let's share. Peter, you can click share your screen. Okay. Yep. Share your screen, Peter. Yep. Okay, I see your screen. Okay, click on the trading view. Okay, and then click. This is Microsoft. Okay, can you click on Apple for me, please? Okay, and then you scroll. This one is 1 hour. You see, you have to change 1 hour. Yep. To 1 day. 1 day. Okay, and then scroll down. Go to make it smaller. Peter, make it smaller. Can you make the graph is in vertical is smaller? Okay, and you see the letter down, letter on. No. Enough. Okay, and you click and you see E and D. Peter, you say E and D. Okay, and after you click on that one, yep, click it. That click one. Yep, you see earning and revenue. Okay, that's all. Okay, you found it already. Louis, can you see it?
I will share screen. Wait.
Okay, Peter, can you close your screen and then Louis gonna share it. Okay, Waka, you see already? Okay.
Do you see my screen?
Yep, I see your screen. You click on the publish. Louis, you see the publish, right? And down the publish, they have like the publish, the blue one on the right. Yep. The below the publish. No, below. No. Not that one. Below the publish, they have like that one. Watch list. Yep, click on that one, and then click on the Apple. Yep, and then change 1 minute. Change 1 minute to 1 day. Louis, you see on the left. Yep. Below, you see 1M. 1M. They have a letter 1M. You click on 1M.
I changed it to 1 day already.
No, you didn't change it yet. It show 1M. You see 1M. You have to change it to.
You look at your
you click on
left
1M.
top
Yeah.
left
On the
corner.
left side. Yeah,
Left
left
to
corner.
This is
Next to. No. This
left
is
to
1
the
minute.
it's
Oh, you want me to
Next
change to
to
1M?
no,
no.
Louis,
I want to
it's
change
a
you
history.
1 day.
It's a length of a
Yeah.
history. So left top of the page.
Left.
You can see
Yeah,
the
a little bit.
one
Oh,
On,
M
yeah.
there.
That one. Go to
Perfect.
1 day. Yeah.
This one.
Yeah.
This one.
Okay, and then yep. Move the graph. Move the graph that I teach you to see everything. You click on the price.
Wait.
Click on the price to make it shorter. Yep. Click on the price to make it shorter. Yep. To see the graph nicely. Okay, Louis. Now you see E. Click on E.
Yeah, I see.
The below. Okay, E. Okay, everyone see this? Okay.
Yeah.
Okay. Yep, you can close and I'm gonna show from my size. Okay, good job. Good, everyone. Okay, let's see. Now, when you want to know about the information from that company, you just click on E and D. What difference? E is the day, listen carefully, that company announce the earning and revenue. Each year, normally the company got announced about 4 times. We call quarterly, 3 months once, another 3 months again, another 3 months again. You know what I mean? Okay, you're gonna see every 3 months. The normal company gonna announce every 3 months. Okay, but some company once a year, some company twice a year, some company intermittent. It depends. Some company don't have a profit, so they don't announce. Okay, so they announce on February 1st something. Okay, and they announce after. What does it mean? The period ending December 2023 is mean fourth quarter. Okay, because 1 year have a fourth quarter, you know. So this is the performance from October, November, and December, only 3 months. Okay, and that 3 months, the earning that they have is 2.18. Okay, estimate is from speculator, from analyst, from broker. Okay, we call estimate. Okay, surprise is mean more than they expected. Okay, this is called earning. Okay, and this is called revenue. We're gonna see about this one later. Okay, and when you click on D is dividend. Okay, it means they announce that we're gonna issue dividend to the investor. Okay, X date, it means we're gonna learn this one we call XD. When we buy the stock, they're gonna have like some suffix, some like a exponent on that stock on this day. We call X date. What is the X date mean? X come from exclude. It means if you buy the stock from February 9 onward, you will not get dividend from this quarter. But if you buy before, let's say you buy on Thursday 8, you're gonna get dividend. Okay, understand what I mean? We call this one X date. And how much they're gonna spend for you? They're gonna give you 24 cents from only one stock. One stock you get 24 cents. And how much you pay for stock? It depends. The price that you buy is different, right? Let's say you buy from this one, you buy 182. If you buy this day, 169. If you buy this day, 157. If you buy this day, 125. If you buy on like many years ago, like from this one, it means $17. You're gonna get 24 cents the same, no matter what the price you buy, because they give 24% for one share. Okay, if you have one share, you get 24%. You have 2 shares, multiply by 2. You have 10 shares, you multiply by 10. Okay, question, Peter?
I think I missed here, correct me if I'm wrong. I was thinking 0.24 is 0.24 cent or 0.24%.
No, I told you 24 cents. Okay, only quarter of the dollar, not percent. 24
that's it.
cents.
Yeah. So for every stock, you're gonna receive back 24 cents. So
Yeah,
for
if you buy
example,
one
if
stock.
I buy 100 stock from Apple, and on that dividend,
you multiply.
I'm gonna receive 24 cents multiplied by 100.
Yep, you get $24. 24
Nice.
bucks. Yep.
How did I get money? Okay.
Okay, understand? Okay, and the day
Understand.
that you're gonna, okay, the day then they're gonna transfer that dividend is February 15, which is very fast. Okay, only 1 week after they announce this one. Okay, so each time they pay your dividend differently, right? This they pay you 24 cents the same. Let's say this is 24. Okay, very good, right? 24. This is 23. You see, it's go up and go up. Okay, and this one is 23, and this one is 23. Oh, it means that this company is very good. This is one, you see, only 20. Okay, 20. You see, so this company very good in dividend, right? This say to 20. Okay. Oh, and they had adjust amount. I gotta tell you about this one about adjust amount. It happened when the stock split. Okay, I gonna teach you about the split too. We call financial engineering. Okay, how to in English is how to say it's like a trick one. It's a trick from the company. Okay, because I told you when the price is go high and Berkshire Hathaway didn't split. Okay, so the split it mean I'm gonna teach you later, but this one is very easy. The amount of the money is gonna be the same. Let's say you have 100 stock that you just buy, right, Peter? Okay, split it mean you get more stock, but the price of each stock is lower 4 times. Let's say you buy stock on this day, Peter. Let's say you buy stock on this day, and that stock is 100. Okay. Yeah, give me the calculator. If you have calculator, okay, you can use calculator to use that. I'm gonna show you how and how much you gonna pay. How gonna you if you want to buy 100 stocks, if the stock is 100, Peter?
I'm doing calculate.
Yep, you can use calculator.
How much you want me to multiply 154 cents?
Can
you give me the price, please?
I'm gonna write it. Okay, let's write it. Let's say you have 100.
That's about 100
You multiply
right now.
by 100, right? 100 multiply 100. What you get?
10,000.
Yep. So now you put the money 10,000, right? And then now you have 100. Yeah, this one is a little bit hard, but now you have like 100 stocks. And each stock is, okay, now you have 100 stock, Peter. What happened when they split, Peter? The day that they split, everyone gonna get stock more than you have 4 times because they split for 1. When they split for 1, it means that you have the stock 4 times that you supposed to have. Whoa, it's
so
good, right?
1 second. Sorry for interrupting. So like split 4 over 1 is mean that like multiply by 4.
Yep.
So if it's split 1 over 4, it means that like your current stock gonna only like a quarter of it used to have. So the ratio is 4 over 1. This means that you're gonna get your 100 stock multiplied by 4. Similar
okay.
like that.
Okay, so I'm gonna show you the day that they split the stock. The price of the stock is 100, about 100. Let's say 125. Let's say 130. Okay, 130. This is the price today. But the day that you buy the stock here, okay, let's say the value of the stock, if you have to divide by we call like multiply by 4. I'm gonna say it's gonna be 520. You understand? So it means that the day that you buy 100 stock, the price of that day, let's say that they have a same price, the price is 520. But when you 520 multiplied by 100, you're gonna say get the same amount of the money. Okay, Waka, understand?
Actually, I don't get it. So the price of stock is divided by 4. But
Yep.
we can own the 4 times stock, not the number of stock, right?
Yep.
Okay. So then
Yep.
how about
you get more stock, but the price of the stock decreased.
How about the dividends?
Dividend gonna get from 400. Yeah.
400.
Good question. Yeah, from 400.
Oh, now I get it. Thank you. Yeah.
Wait,
So
So
good question. I know, Louis, you're gonna ask me, whoa, it means we're gonna get more money from dividend, right?
yeah, is it like
Let's see,
that
let's see.
or
Yeah, you see, divide by 4, you see? You see?
so
Yeah, you see. You can use calculator,
wait.
Peter. You see?
So
Yep.
if we have 100 stock, right? And then after split we have 400, right? So we will still get the 82 cent, but multiply by 400 now.
Nope. You're gonna
No,
get
okay.
you're gonna get this one adjust amount, you see? This is a good thing from TradingView, because TradingView know that people gonna get confused, but most of the website didn't tell you about this. Okay, this is a good thing about TradingView, because
But after sorry to interrupt. The after split, we can get a dividend that from the next term. So it depends on companies. So like quarterly or half year.
Yep, exactly. But
So
the dividend that you gonna get after split normally gonna divide by 4 compared to the dividend that you supposed to get before split, if that company have the same profit.
So they will adjust.
Yeah, you see, Waka.
Can I interrupt
Yeah,
also?
you can use this number, Peter, Louis, Waka. You can put this number into your calculator, 0.82, and you divide by 4 on your computer, and you're gonna see.
Oh yeah. Now
Can I interrupt also?
Understand?
I get it. I get it. I get
Good job.
it.
Good job. Okay,
So
Peter,
my
go ahead.
understanding. Okay, Peter can go.
Peter,
So it means that like when it comes to split stock, it means that the amount that you get, it's just changing between the amount of stock and the price of the stock. Increase
exactly.
the amount of stock by 4,
Yep.
and divide and decrease the price of your stock by 4.
Yep. But
And also it affect your dividend as well, like the amount.
Yeah, listen to me. You have to write it. The amount of your stock gonna increase 4 times exactly, precisely, but the price not supposed to be decreased by 4, not always. Maybe decreased by 5, maybe decreased by 4.5, maybe decreased by 4, maybe decreased by 3.5. It depends on the market. Okay, you see, the market is fluctuated, but the number of stock in your computer, in your bank account, in your phone, you're gonna see on this day your stock have more than you buy. In the first time you buy 100 stock, but this day in your phone gonna show in your portfolio you have 400 stock, but the price it depends on the market.
Is that okay if you can give us another example about split stock as well?
Yeah. I will show you about this one later, more and more, because this we call the trick of the of the market, and people lose money or get money from this understanding. Okay, Louis, what you gonna ask?
So I want to ask, so if we have a split, the conclusion is it a good thing or a bad thing?
Both way. Yep, a good question.
So
Yep,
it
yep,
depends
both.
on the market. If the price go like 3.5, for example, is mean that it's a good thing because the price per stock is more expensive than back then. But if it's more than 4, it's a bad thing.
Exactly.
Okay.
Exactly. Good job. Good job.
And
Okay,
normally
any question?
it's good things for investors, I think, and also the companies can issue more stocks. So the number of investors, I mean the stockholders are increasing. So which means that the companies get more stable for income, the money.
In hypothetically, yes.
Hypothetically, yes.
Yeah.
But yeah. So generally speaking, so
generally speaking, yes. But some companies do that do that on the bad purpose.
Yeah, but it's a kind of strategy to get more stocks and more income from, because the price per one stock is going down after split. So a lot of investors can join to buying stock.
Exactly.
So the company can gather more stakeholders, I mean stockholders.
Exactly. Exactly.
So companies can expect they can make more money from the investors.
Yep, exactly.
So but this is the kind of a strategy. Yeah, always. So there is no 100% guarantee. Yeah, but it's a kind of strategy.
So correct me if I'm wrong. So it means that when we come to split stock, it means that right now the company have more stocks, so it encourage investors to buy stock. Is that what you mean?
It's easy for investor, retail investor, to access that stock, because now let's say the price is 100 Peter. Okay, let's say that I point this one is 100. It means in that time this company have a price is 400. You cannot see 100 in the graph, but in that day the graph here is 400. You have to have 400 to buy one stock. But after they like a split, okay, let's say the graph is here, you have only 100, you can buy one stock. But so it means that easy for us to exit. That happened with the Berkshire Hathaway, you remember? Because Berkshire Hathaway never split the stock. That's why Berkshire go, you see how to buy Berkshire, you see how you're gonna buy Berkshire Hathaway, because you didn't see any split here, right? And they didn't give dividend at all. You see, every time the Berkshire move up and move up, you see that they didn't give you a dividend. They just let you know about the revenue and earning, but they didn't announce about the dividend. Okay. One company I'm gonna show you is a Tesla. I think Tesla is a split more than one time, and after they split, the price go down. Most of the company normally after split the price go up. Okay, because as the Waka say, normally it's supposed to go up because easy to get in, and this is the Tesla. You see, after the Tesla split the stock, the price go down. You see, okay, but just a period of time. Okay, but after that maybe they go up. Oh, but now after split, it never come to the same place again. Okay, but maybe later on they're gonna come back. Okay, but yeah, this is an example. Okay, not always that after split is gonna go up or go down. It depends on the market. Okay, market gonna choose want to go up or go down. This time you see go up. Okay, you see uh, Tesla split the stock 2 times in 3 years. Not likely, very unlikely to happen. Not easy to split 3 years 2 times. Normally like of 10
Yeah,
years
it
they
doesn't
split
happen a
1
lot.
time.
Yeah, it doesn't happen a
Yeah,
lot. Yeah.
yeah, 10 years to split 1 time. So you
It's
see
kind of
this
really
time
big
is
change. So.
yeah. So this time they split 5-1, and then after that they sideways a little bit and then go up. And this time it split 3-1. You see, every time they split, it doesn't mean like a 4-1, 2-1. They can choose the ratio that they want. In my country, normally they split a 10-1. The basic one is 10-1, but this is America. They can split any number that they want. Okay, you see, before that it never split before. In the 10 years of the Tesla, it never split. One they split on the first time. They split the second time only 3 years. This is called split. Okay, we have time very, very limited. I'm gonna wrap up about how to get the profit. Okay, how to get a profit from the stock is very easy. Okay, I'm gonna show you one thing we call indicator. You can put indicator here. You see indicator. Indicator is mean the mathematic formula that they choose. They mix about the data from the graph. Let's say open, high, low, only 4 data. They mix. Okay, they mix formula and create an indicator, and that indicator gonna help you to find where you want to buy, where you're gonna sell. Some of them bluntly tell you directly. Some of them you have to translate or interpret. And the first indicator is free. Some of indicator you have to buy because they create the formula by themselves. They don't want to share with anyone. Some of them free. Okay, but doesn't mean free is not good. Most of the free one better than the paid one. Okay, let's say the easy one is called CDC, Action Zone. Okay, it's worldwide and it's very, very easy. Just click this one. You have to type it. Okay, let's try. Click on indicator, and on search box you click CDC. Okay, and ACTINO. Okay, action. Did you see this one? Okay, you have to choose the number is 4363 because they have a lot of CDC action zone. Okay, I'm gonna let you know later what different about this one. So I'm gonna choose the version 2. Okay. Okay, so after you click, it's gonna show on your graph like this. Let's say this is Apple. Okay, let's see how you're gonna get profits from this one easily. They're gonna have I'm gonna close something here. Okay, I think version 2 is not good. Okay, you have to click out, sorry, and then you have to click out like this, remove. Okay, click remove first and then choose a new one, CDC. And you have to choose version 3. Yeah, choose version 3, 2020. Okay, click it. You have to remove first. Okay, click it. Yeah, this one is easier. The logic is the same, but this one is easier because they have a ball help you to find. When you see the ball, the green ball is mean you're gonna buy. The red ball is mean you're gonna sell. The green ball is mean you're gonna buy. The red ball is mean you're gonna sell. Easy like that. Okay, you want to check from COVID. Okay, we're gonna come back to the 2000. Let's say on 2020. Okay, on the year of COVID. Okay, let's say like this. Okay, follow me. Okay, you're gonna play with you later. Let's say I'm gonna buy from here. It means I'm gonna buy on $52. Okay, I'm gonna you see, if you didn't see any red, it means you do nothing because this is one day. You buy on this price because this is the close price, right? You're gonna see the the green after they close. Okay, so you're gonna buy from here. I'm gonna use another indicator to find how much money you're gonna get from here. You can use something we call the price range. You're gonna start from here, you see, and you're gonna go up because we didn't sell yet, right? We didn't see any red, right? And then we're gonna until we see red, and red is here. We cannot sell here, okay? Because we don't know, okay? We like a robot. We don't know where you're gonna go, okay? We don't know. Someone say pick a golf. Why don't we sell here? Because we're gonna follow the indicator. If the indicator didn't say that we're gonna sell, we don't sell. So we sell here because this is a close price. I teach you on the first week, right? So you're gonna get the 37%. How long you're gonna get 37%? You're gonna use another box we call this one. I'm gonna teach you how to use this one later, okay? I want you to know how to get money. This is the one way to get money, okay? Without knowing anything. Okay, you buy from this day and you sell on this day. You have to wait until 196 days, okay, half of the year. And only half of the year, you get 37% from the big company like Apple. That's all. And then you can sell in the market. You can get money from both sides. Okay, most of the people in the world get the money from only one way: buy and sell. But if you know from me, and I'm gonna teach you, you can sell stock without stock. You can get money from stock without owning the stock. Okay, normally you're gonna get, let's say I buy this bottle. You didn't see my bottle, okay? I buy from the Star Market $1, and then I can sell to you $2. I get a profit $1, right? But I can sell this one before I own it. Let's say I told Waka, I want to sell my bottle to you, Waka. Do you want to buy? And Waka say, yeah, I want to buy. How much? I sell to Waka $2. Okay, and Waka give that $2 to me. And then I run to Star Market. You know what I mean? And then I spend $1 to the Star Market, and then run back to give this bottle to Waka. Waka, okay, this is your bottle that I agree with you. Then I get I get $1 for free. Okay, we can do this one in stock market. Okay, with little effort, but you have to know a little bit. We call short sale. I'm gonna teach you later. Okay, so it means now you can sell from this one. Okay, and let's see, you're gonna get money or not. It depends on the price, because when you sell, you want the price go down, right? Because when you sell first, you want the price go down when you sell here. And you see, what is the next screen? The next screen is here. It doesn't mean you're going to get money all the time, okay? Most of the time you lose money, okay? But when you get money, you're going to get big money. But when you lose a little money. Why? You see like this. Okay, I'm going to go quick. Okay, this is the price that you sell, and this is the price that you buy back. So this one you get money a little bit. Okay, so next you're going to buy from here, 71. And you're going to sell until you get a cigarette. You're going to sell here, 71 to 100. You get $30 again. And then you sell. After you buy and sell, you sell again. You sell from 106. And then you have to buy back 116. And this one you lost $10. Okay, you know what I mean? When you buy from here, 116, you're going to sell here, 112. Now you lose $5. I'm going to go fast, okay? When you sell here, 111, and you buy back here, you're gonna lose $4. You buy from here again, 115. Okay, you see 115. Okay, and now 115, you sell here 129. So you get like $14, and then you sell again 129. You sell. When you sell, you want them to go down, right? But then you have to buy back 130. So you lost only $1. You see, every time you lost really very minimum. But let's see, I'm gonna buy back from here again because the green is being buy. Okay, so you buy from 130, and then you're gonna sell here. So you lose $7. This time you lose $7. Okay, and then you come back from here, and then you lose about $10, and then you buy from 129, and then wait until the red one again. So you get about $10, $13, something like that, and then you lose $5, and then 140, 150, go up, go up, go up, and then 140, you get a $14. Yeah, something like that. Okay, understand? This is say how to get money from stock. Easy. And then you can do like a back test. You can like run. This is a very easy one because you don't need to do anything, because the indicator gonna tell you red, sell, blue. If you get green, buy. If you see red, you sell. If you see the green, you buy. Okay. Any question?
I didn't get why the red is sell and the green is red.
The green is buy.
Green
Right?
is buy, yeah.
Are
So
you
the
trying
red
to
is mean
talking about the color, right? Because is that what you're trying to say, Wakaku?
Because green looks higher than red. So
I'm gonna teach you.
Why do we buy the higher price and sell lower price? I didn't get it.
It means we lose. In that time, we lose
way.
money.
I think it's different way. Like when you start to sell, which means that you already get the highest point. So now the stock is gonna fall down.
Okay, I'm gonna show you. This is called like the replay. Okay, when you click on this one, you can replay. You can go back to the way that you want to. We call like back test. Okay, Louis. Yep. Ask me.
Yeah, I like a similar question with Waka. Why should we sell when the price drop? We should sell when the price is high, right?
Oh, because you don't know about the it's not easy for the stock.
Because if we sell,
because
that means we lose money.
So the stock. Okay, I'm gonna teach you later. Stock have a 2 dimension. 90% of the person in the investment market know only 1 dimension. The 1 dimension is buy cheap and sell high. That is everyone know about that. Buy $1, sell $2. Buy $1, sell 1.5. You get profit. This is the only way that you do business, right? You know what I mean?
Yes.
But in stocks, you can sell before you buy. So I'm gonna save that later. Okay, we're gonna skip this one first because it's very, very counterintuitive in your brain. Okay, but I want you to learn now. I want to open your mind from the very first day, because I know this thing later on, very late, and I feel like, oh, if I know before that, I can buy, I can sell. Even I don't have stock, I can sell stock. Even I don't have stock, because normally you're gonna sell stock when you have that stock, right? But in stock market, the system allow you to sell the stock even you don't have the stock. I'm gonna teach you later, but now I'm gonna focus only the first dimension first. Okay, buy when it's green, but why we have to sell when it go down? Why we don't sell in the high? I know what you mean. Okay, I'm gonna show you. Okay, let's say I'm gonna look for the green. Okay, this is green. When you see green on the graph, it means that you're gonna buy here. Okay, 52. After you buy, you do nothing. Understand? Why you do nothing? Because we don't know about the future, right? You don't know about the future. Okay, if you know, if you know, do not rely on this indicator. You know what I mean? Indicator is mean helper, supporter. But if you smart, you no need to use indicator. You can use your thinking, buy and then waiting until you satisfy the price. When you satisfy the price, you sell. Easy like that. Okay, you can get money, you can lose money on your own. Okay, but this is only one example to use indicator. Okay, you buy here 52, and then waiting for the red one. Okay, you didn't see the red. Okay, you do nothing. You do nothing. Let's see what happened when the price is here. Whoa, golf! I get $10 already, and this $10 is about 20%. But you don't sell, and then the price go down. Oh, golf! So unfortunately, if I sell here, I will get more money than I sell here. You know what I mean? That is the feeling. But if you follow this indicator, if you trust this indicator, you will not sell until you see the red. No matter what happens, you're gonna sell when you see the red. You see how hard it is? It feels easy. Okay, see the red and we're gonna sell. But you see what happened? It's gonna go up again. And you feel, whoa, 66. Very, very temptation. And we not sell. And when the price go down, oh my God, golf, I should sell on 66. Now I have 65. I like uh lost a little bit profit. Yeah, you see, this is about mindset. It depends on you. It depends on your feeling. It depends on your thing. It depends your mindset, your attitude. It depends on your experience on the market. It depends on your perspective on this indicator. It depends on the time that you are in this market. And then you're waiting for next one. And you didn't sell. You remember the price is 52. Okay, I'm gonna play this one. And let's see what happened in your mind. When you're feeling, whoa, now 52, go to 68, 60, 69, and I don't sell until I see the red one. I didn't see a red one. And it's one candlestick in one day. I don't want to sell. I don't want to sell because I'm waiting for the red one. I will sell when the red come. And the red is like a holy grail because this is called indicator. I don't sell. So you see, if I sell here, I may feel regret because it's go up. Okay, and what happened? When the price go to 80, I don't sell, but someone sell. And then when it go down, the one who sell very happy because they feel, oh, I thank to myself that I sell today because tomorrow it go down to 77. I lose $3 in one day. How good I am. You see what I mean? So it means that you're gonna win. If you're very, very good, if you can predict that tomorrow is gonna go down, yeah, you can sell this day. And what next? If you do like this, you cannot repeatable. The hard thing about the market is every people can win every day, but not every people can do that the same every day. With this indicator, you can repeat this profit every ball, red and blue, red and green, red and green. Easy. This is the easy way. This is only one way you can make money. I just show you. And then you waiting for this one because the first one who sell this one don't know where gonna buy again. You know what I mean? You have money, you have cash, but you afraid to buy again. Why you afraid? Because you feel, whoa, it's too high. I don't want to buy here. You know what I mean? When you sell something, you don't want to buy the same thing with the higher price that you just sell it. And then when it go down like this, you're gonna feel, oh, I don't want buy here because I expect it's gonna go lower and lower. You're gonna buy when it's lower and lower. And then you see the rate happen. I sell here 72, which is lower than the one who sell on 80. I admit, I get money, I get profit less than that person. But the thing is, I have a system to make money for the next time. But that person who sell here, which is very high, 80, what you gonna do next? Okay, and then I'm gonna ask you, what about the logic of this indicator? This indicator is come from the red line and the blue line. This is come from moving average. Moving average come from the price from the past, and the price come from 12 candlestick and 26 candlestick. I'm gonna teach you this one later. Okay, and then they create a moving average, and they do a back test, and they do like a AI. So every time this line cross, it means the price gonna change into that trend. Let's say like this. If the red you are below than the blue, they say the price have probability gonna go down more than go up. If the red line upper or higher than the blue, it means the price have probability go up more than go down. It's not 100%. It's about probability. That's why when the price cross the red ball happen, it means if you sell this price, this is the price that's supposed to go down from this. Okay, not 100%. Okay, you see, and the price go down, but we don't know, right? We don't know, but this is probability. This indicator predict the future. Okay, you know what I mean? And let's see how this one predicted. So when you sell, you do nothing. Now you don't have you have cash, okay? When you sell this price, you have cash. You buy from 52 and you sell on 71. Now you have $71. Okay, now you have $71 and you do nothing. Okay, you wait until you get a green mark. You're gonna buy when it's green. Golf, why don't you sell? Why don't you buy here? Okay, so you have to remember, this is called trading, different from investing. Okay, we not hold the stock, forget the dividend. This is called we want only the capital gain. We didn't do the same way that we do in the first thing that I told you. This is a different one. This is how you get money. This is most of the people play with the stock. 90% who invest, actually it's more than 90%. More than 90% who come to the stock play with the stock like this, like I told you. And this is how the price changed. Without the person who buy and sell, the price gonna stay the same. You know what I mean? If you only invest and you do nothing, the price supposed to be the same, right? Because you didn't sell it, you didn't buy it. How the price gonna move? So the price move from a lot of people speculation. This is how they speculation, and they have a way to speculation, very different way. But they have only two way. After they use a many resource to speculation to predict the direction. They have only two way to decide: buy and sell. When they buy, they expect that they're gonna go up. When they sell, because they expect that the price is gonna go down. Okay, That is only output of the people, but the input, they have a 1,000 way to give to give the idea. So now you do nothing. You have cash $71 and wait until the green come. You see, in this way you get more than 9% per year. Okay, easily. This is another way you can get more than 9% per year. And then you have money and you didn't spend it, you didn't buy it, because you wait until the green come. And green didn't come. Why green didn't come? Because the red line not cross the blue. They're gonna cross soon. You see, they cross already. Once the red cross the blue, the green ball gonna happen. You're gonna buy this way. You're gonna use your $71, buy the $71 price. It's not guarantee you're gonna get profits this time. You maybe lose money on this time, but in long run, you're gonna get money, because they backtest. You can backtest by yourself, because this indicator get money when they have trend and lose money when the price sideways. Any question? Okay, and this answer your question, right, Waka and Louis, that you asked me why we buy on the price go up. Why don't we buy here, right? Understand about this?
I got it. Yeah, it's because it's better than before. I mean so even the first red candle, like the just starting falling down, but still better than the very first point, that the green one, like the 50 something.
So if you can buy here, it's very, very good, right? You buy on 56, better than you buy here. But with this indicator,
nobody knows. Yeah,
exactly. This indicator help you, because in this here, this indicator tell you, boss, the price not go up yet. The price have a probability to go down. But when the price move here, this indicator tell you the probability that is gonna go up, continue to go up, more than it's gonna come back to go down, because it proved by this little price that someone buy it. Not just only one buy it. They have a lot of people buy it. And then you buy here, it means that you have a probability it's gonna, but it's not 100%. You can lose, but you're gonna lose very small of money.
I totally got it. Yeah. So, but we need to pay attention very first point of red and green, like not in the middle.
71. Yep, 71, and then you sweat until do nothing. 71.
Yeah, so
this is a big
between the very first point of green and just before the turning to red, between 2 points we don't do anything. It's better to do nothing. But just very first point of turn the red or green, this is the timing. Like this is the point to do action.
So you buy from 71
buy or sell.
and then you sell on 106. You get $30. That's all. And then if I change this to Bitcoin, let's say Bitcoin, easy. If you don't know about Bitcoin, because you don't trust Bitcoin,
more busy.
But with this graph, with this graph, you no need to believe in the Bitcoin, because you didn't invest in Bitcoin. You just get the capital gain. You just use very small money, like $1. With $1 you can buy Bitcoin, okay? Because they're gonna divide the fractional share for you. You buy here, you see, 43,000, and now you didn't sell yet. Even the price go down from 73 until now, because you didn't see a red one. You see what I mean? If you let's say because you want to buy here, yeah, you see this is the latest one you buy, 26,000, and then you sell here 41,000. You get about 70% from Bitcoin, something like that. Okay, you can use this one because now you know about this one. You can use to adapt with the S&P 500, Nasdaq, the same. Even the S&P 500, you can use this trick, combine with 9%. I'm gonna teach this one later. You can mix. Yeah, the more you learn, the more you earn. You can mix together. If you buy S&P, okay, and you mix strategy with this one, you're gonna get more than 9%. I think one of maybe you know about the strategy already. You can mix and then I'm gonna let you know this one later. Okay, today we use a lot of the time already. The time fly already when we go to the real experience. It's good to discuss for everyone. So this week we I don't have any homework, but I want you to do this homework. Click on S&P X, okay? And do some back tests for me. And click this here on day one, okay? And go back until 2022. Okay, that's all. Let's see how many times you're gonna do. 22, okay? Start from the green, the first green. Okay, I show you the first green is here. Okay, you can write it. March 22, 2022. This is the first day that I'm gonna buy.
March
I want you
22?
to, yep. Do you see it?
March 22. Okay, 27.
Okay, I'm gonna, homework is I want you to write in the paper and take a picture, or write in your phone and take a picture. Let's say this one. You have to buy on the next day, right? You cannot buy on this day because the green gonna come after the market close. You cannot buy on this day, right? You're gonna buy the next day. Are you understand? On the next day, you can buy from the opening price. We call open price. Can you tell me what is the price you're gonna buy?
4,493.10.
Exactly. You have to write that price for me. Okay? Write that price for me to make sure that you understand that is the price that you buy. Okay? You can create your Excel. You can write on your paper. Make it easy. Okay? Write it. Buy 4493.1 on March 23. Understand, Waka?
23?
Yeah, 22. March
22,
20,
yeah.
March 23, 2022. Okay, Louis, understand? Louis, do you know how to find the 4493, right?
In my dot, it's March 24, not 23.
Oh, you have to move. You have to move back a lot. You have to move until you see until you see Wednesday 23 March 2022. You have to move.
Yeah, 20. Okay, I will share my screen.
Okay.
Okay. So if you see this dot, right? It's March 24.
Oh.
Maybe OTC
Okay.
subtract
Okay.
4,
Because you have
YOB
to use
OTC 5.
S&P.
See?
S&P.
Oh, right.
You have to use.
Wait,
Okay. This
I
one
change
is
it
the
to
Apple. Yeah, you have to go to S&P. You can click on the index, Louis. Oh, okay. This one. Yep.
wait.
Okay. Yep.
Wait, where's
Yeah, March
2020?
22. March 2022. Yep. You will find.
Oh, okay.
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 Okay. Understand?
Yeah,
and
yeah.
you see the price, okay?
The
4469,
4469.
okay?
Yeah.
So now everyone know how to find, okay? Okay, I'm gonna share my screen. Louis, you
Okay.
can
Yeah.
okay. I'm gonna share my screen, okay? Everyone know how to do homework, okay?
So sorry, but so did you buy on March 22 or March 23?
I'm gonna see it again. You have to buy the day after.
So like
the day after.
yeah, day after. Yeah.
You have to buy
so you
on
said,
March 23, Louis.
yeah,
You have to buy
right. Yeah.
March 23, Louis. Understand? Because this dot come after the market close. After market close, it's confirmed that the day after this day you can buy. So the price that you're gonna buy is 4493.1. Okay. I encourage you to use Excel because Excel gonna help you to find the we call profit and loss. And then when you're gonna sell, you cannot sell on the red, right? Because the red come here, you're gonna sell the candlestick next to that. What is the price that you're gonna sell? Louis, tell me.
For 390.63.
Exactly. You put that number in the Excel, okay? And the next column you're gonna choose profit or loss, and then you put the formula, and then
The
you're gonna see
function.
profit
Okay.
or loss. Yep, the function. Everyone know. Only green to red, not red to green. Understand? Okay. From this one, you not sell. You're gonna start again after you see the green. You're gonna buy again every green, and then this one is tricky. This one is very tricky because after you buy, okay, you're gonna buy this one, right? The price that you're gonna buy is 4489.17. You're gonna type that, and then at the end of this day, it turned red. It means the next day you're gonna sell it. So it means you have to sell 4385.83. Understand what I mean? Okay, Louis, understand? Peter, understand?
Is it still open price or?
Yeah, sell open price. Sell open price.
Price.
Open price here. And how you gonna see open price is here, right? Okay. You have to see open price here, and then looking for the next trade is on a green. Okay, this one. So you're gonna buy on 3998.43. You don't forget to put the date. Okay, put the date too, and we can compare who get a correct one or wrong one. Okay.
Golf. I think
okay.
Golf. I think it's better to review next time. Don't give us the homework. Let's review.
Because it's
let's
hard,
do
right? It's very hard, right?
Yeah. Let's review the next time together.
Okay. Yep. No homework. I want
no homework.
you to have
I think it's
a
better.
spring break. A spring break. Okay. Next time we're gonna do this one together. Okay.
Together, yeah.
Okay, because
I try to think by myself, but yeah, it's better, I think.
Okay. We're gonna do this one together. Okay, we're gonna do this one with Excel together, and I'm gonna create template, and then we're gonna share and then put the number together. It's gonna be easier. And yeah, thank you to let me know. Okay, any questions? Okay, time to go to sleep. Okay, and thank you everyone for the time today, and have a good spring break for everyone. Bye bye.
You too. Thank